Welcome back to Explain the Charts. Today we're going over the EURUSD, the euro against the US dollar. There's a lot of talk about a potential reversal in the euro and whether we're headed for a long-term trend change or just a short-term correction. To figure this out, we're going to look at both the current news and the chart data to see if we can find any correlations. If we look at the recent headlines, we can see the US dollar is on the rise, especially against the yen, with the DXY index facing resistance around 104.50. The upcoming week is crucial for macroeconomic traders, with key economic data releases like the core PCE inflation and non-farm payrolls coming out. The U.S. presidential election and the FOMC rate decision will also significantly impact the market. The Fed is expected to cut rates next week, but strong economic data could challenge this expectation, potentially boosting the US dollar. Now let's look at the chart data to see what we can find. On the daily chart, we see a clear downtrend starting in early October, with EURUSD struggling to break above the 1.0800 level. The current price action is showing lower highs and lower lows, a classic sign of bearish momentum. The 200-day moving average is also acting as a significant resistance level, which further reinforces this bearish sentiment. However, we also see a short-term bounce in the euro, potentially reversing the bearish trend that began at the start of the fourth quarter. EURUSD found support at 1.0765, leading to a rebound on Thursday. We're watching to see if this support level holds and if the pair can rally towards the 1.0862 Fibonacci level. A breakout above the 200-day moving average would signal a reversal of this downtrend. Now, let's look at the hourly chart to see if we can gain a more granular understanding of the current price action. The hourly chart is showing a more volatile picture than the daily chart. While there's still evidence of a downtrend, we see signs of consolidation and sideways movement. The price is currently trading within a range, bouncing between support levels at 1.0940 and resistance at 1.0970. If we look at the last 10 hours of trading, we see that the price has struggled to break above the 1.0950 level. This could indicate that the euro is losing momentum and might be heading for a short-term correction. However, we also see a series of bullish engulfing candles in the past 24 hours, which could suggest a reversal of this short-term downtrend. The 15-minute chart will give us a more detailed look at this recent price action. The 15-minute chart clearly shows the recent bounce in the euro, with a series of bullish candles pushing the price above the 1.0820 level. This indicates a surge in bullish momentum, potentially fueled by short covering activity. The price is now approaching the 1.0830 level, which acted as resistance in the past. If the euro breaks above this level, we could see further upward movement. However, it's important to remember that the overall market sentiment is still bearish, with the US dollar showing strength. The recent bounce could just be a temporary correction, and the euro might resume its downtrend after finding resistance. So, what should traders look for in the coming days? If the euro breaks above the 1.0862 Fibonacci level and holds above the 200-day moving average on the daily chart, it would be a strong signal of a potential reversal. However, if the price falls below the 1.0765 support level and continues to make lower highs and lower lows on the daily chart, it would indicate a continuation of the downtrend. The upcoming U.S. economic data releases will also be crucial factors to watch. If the core PCE inflation and non-farm payrolls come in strong, it could boost the US dollar and put downward pressure on the euro. On the other hand, if the data disappoints, it could weaken the US dollar and provide further upside potential for the euro. The US presidential election and the FOMC rate decision will also be key events that will influence the market direction. Overall, the EURUSD is currently at a crossroads, with the potential for both a rally and a reversal. The market is highly volatile, and traders should stay vigilant and closely monitor the news, technical indicators, and chart patterns. Key price levels to watch include the 1.0862 Fibonacci level, the 200-day moving average, and the 1.0765 support level on the daily chart. Keep in mind that the market is always changing, so be prepared to adjust your trading strategy based on the evolving market conditions.